want to go over 3 strategies from last week's trade that were the highlights. These are strategies we're not trading and want to figure out how we can implement this type of method. The first 2 especially. The third is a discretionary method based on tick divergences. And I'm going to show you that here in this Untitled workspace. But first of all, adaptive moving average, one of our long-term favorite strategies. And this strategy can do well in trend and counter-trend markets. It had an uncanny ability to call all these turning points on Friday. We were not trading this strategy. And if you take a look, let's take a look at the equity curve. And I'm going to show you this. Now, it's at a kind of a sweet spot to start trading it again. If I go back further, you'll see an equity curve that kind of looks like this. And then it comes back down like this. And so it's off its equity peaks. And it's kind of come down. It's kind of gone sideways. And could go higher. I also have a new version of this. I found one simple rule really in general. And a gap filter rule that really improve adaptive moving average. And I've added that to the portfolio calculator. All strategy access clients will get that. I'll go over that in another video on adaptive moving average 2023. This strategy did well on Friday, and I want to take a look at implementing that potentially as soon as this week. So maybe tomorrow. CVIX, not CVIX, but a Zig Zag, which uses kind of the concept of CVIX, did really well. Had a really good Friday as well. Profit there, profit here, loss there, profit target. So 4 for 5 on Friday. Here is the longer term equity curve of this strategy going back to May of 2021. And I've wanted to add this strategy. I've been more hesitant because prior to May 2021, which is right there, the equity curve is straight down. And from May of 2021 forward, you see this. This was developed in May of 2022. And so May of 2022 is right in here. We developed a strategy. And you can see it went down a little bit, and then went parabolic. And then it went sideways, and then it went parabolic again. And I sent this out. I said, let's wait for a drawdown. It had a drawdown here. And we didn't get in, and it ran back up to equity peaks, and now it's pulled back just a little bit. But I'm looking for a way to get in on this one. Adaptive moving average, some other strategies to provide us some more diversity. And so I've added a market internal to adaptive moving average for a new version. This does not have a market internal, so that is the second setup that we saw that worked really well last week. A lot of strategies struggled with last week's trade, and so we want some more diversity. Here is the S&P against the NYSE tick. I want to show you some divergences to potentially look at. This is an idea for strategy development or discretionary trading, and we talk about divergences a lot. This is an intraday divergence. You see the market open here, sold off sharply. And then it rallied up to here. So what happened to the tick? Same thing here. And then the market took out the high right here. But what happened on the tick? It did not take out the tick high. So a lower tick high and a higher high on the market. Then what happened here? Made another higher high. What happened? A lower high. So you have 3 points where that market takes 3 new high points and the tick makes 3 lower points. That's a divergence. And what happened to the market after that? Boom, sold off. All right, and so you have this low here. What else happens? You have a short-term divergence where, let's reset that. So that calls that trade. Then you have this where the tick makes a low here. You see the tick low price right there? There's a low here. It takes out the lows of the day right here. It keeps going until here, then it kind of pauses, and you see the tick also at the lows of the day, and then the market rolls over again. But the tick does not take out the low of the day. So you have a 2-point tick divergence here where the market makes a lower low, but the tick does not. And so hard to program these kind of patterns into a trading system sometimes. You also see right here, visually, it's kind of hard to see, but the market makes a lower low right here. So you could have gone long here at this point, taken this trade, or you could have taken it all day if your stop loss was pretty loose. below this low. It would have had to been down here to withstand this new low. But you could also see there's a third tick divergence on the day when the market comes in here, and you can see it makes another new low. The market makes a new low right there, which is lower than that low, but the tick does not. It's a higher low, and this is a lower low. So this is slanted down, and this is slanted up, and so boom, the market rallies into the close. And so 3 tick divergences, 1 here, 2 here, and 3 here. Potential strategy development idea. That's why I bring that up. If you're a discretionary trader, maybe you like that idea as well. But I am looking at potentially trying to figure out the best way to take advantage of this drawdown. The strategies, add strategies like adaptive moving average, as well as the zigzag strategy. I wanted to point out the few of the strengths last week in these 2 strategies, as well as this tick divergence setup. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.